In this video, we're going to go over how to calculate your annual cash flow from a real estate property. So the first step that you need to do is you need to figure out how much is your property generating of monthly revenue. So in this property, I have a revenue amount of $1,200 that I'm receiving from my rents. All right, now the second step you need to do is figure out what are your monthly expenses. So in this example, I have listed a mortgage of $322 and taxes of $122 and insurance of $56. Now I've also budgeted additional amounts for vacancy, repairs, and capital expenditures. And the reason why you want to budget for these amounts on a monthly basis is because you never know when your building may go vacant. For example, let's say you own a property for 1 year and you have it fully occupied, but next year your tenant leaves and now you have a vacant building or a vacant unit. So you want to go ahead and budget an amount for the vacancy. And the way that you normally would do this is if I look at my detailed schedule here, I see that it says detailed schedule B2 times B1. So I'm going to go over to my detailed schedule and I'm going to look at the vacancy rates. So whatever market that you're in or whatever city that you're in, that you live in, or your property is located in, you want to figure out what is the vacancy rate for that particular area. And then you want to multiply that with your overall revenue of the property. So I have a fair market rent of $1,200 per month, and I'm going to multiply that by 5% to generate $60 of my budget for vacancy. And I basically want to do the same thing for repairs. Again, you want to prepare for future repairs that need to be done on the property, and so those should be calculated on a monthly basis because you want to have that money accessible when that time does come. And as you can see here, I've done a similar formula for repairs, and basically I factored in 5% of repairs times the fair market rent, and that gives me a total amount of $60. And then I'm going to also budget for capital expenditures. Now, capital expenditures are big purchases or big transactions that need to be done, such as repairing a roof, or replacing the flooring, or maybe you have a huge plumbing repair that you need to do. These are going to go under capital expenditures. And just to give you a better idea of what are capital expenditures, these are major purchases that need to be done, such as roofing, water heater, any driveway or parking lot repairing, plumbing, windows, or any major painting jobs. And again, the concept is that you want to go ahead and budget these so that you're saving money, so when the time comes that you need to make these repairs, you have the money to make these repairs. Otherwise, you will go broke. All right, and the last expense that I've calculated is the property management fee. Now, currently the property management for this example is charging me 11% of my total rent. So as you can see here, I have 11% times my revenue, and that gives me a total amount of $132 for the property management company to manage my property and handle all of the operations throughout the year. Okay, and that gives us a grand total of $902.27. And so now what I want to do is to calculate my monthly, and I can label this as monthly cash flow, so it helps you with your spreadsheet. I have a monthly cash flow of $297.73, and the way that I've calculated that is I subtracted my total expenses from my total revenue, and that gives me my monthly cash flow. Now all that I want to do now to figure out my annual cash flow, you're going to simply go ahead and multiply your monthly cash flow times the number of months in a year, which is 12, and that gives me $3,572.72. I hope this video was helpful. I will be posting a link to the description on other videos such as the amortization. If you're interested in learning more about real estate and how to assess your property or future properties, you go ahead and subscribe to my YouTube channel. And thanks for watching. Thank you.